Hello and welcome to Business Incorporated. Many thanks for joining us. I am Bolaji Akinwale. Today on the program, UK factory output is still affected by the 2007 and 2008 credit crunch. The International Organization of Securities Commission seeks public opinion on corporate bonds market. Plus, an update on Nigeria's forex markets. We'll begin by taking a look at the story that says that UK manufacturing is still being affected by the credit crunch of 2007 and 2008. That is hampering investments in the sector. According to industry body EEF, while most manufacturers are confident of securing finance, only a third are more likely to borrow money than they were 2 years ago. EEF also revealed that 53% of firms would postpone or cancel investments if they couldn't use their own funds. A separate BDO LLP report found there was a lack of confidence in the sector. Manufacturing accounts for about 10% of the output of the UK economy. And manufacturing grew gradually from 2005 to 2008, at which point it took a dive in the financial crisis in common with the rest of the economy. It recovered from 2010 until the start of 2012, but its growth has been volatile since then. Okay, let's shift our attention to the markets in Europe, as I'm being joined on the program by DWTV financial correspondent Ulrich Bath from the Frankfurt Stock Exchange. Ulrich, welcome to the program. It's good to have you on the show. Now, last week, the markets were concerned about China's weak economic data, but that seems to have been watered down following the impressive numbers from the U.S. jobs report was released on Friday. How are the markets in Europe trading at the moment?
At the moment, they're trading higher. They're still going on the strength of the good news from the United States. That labor market, very important for the world's largest economy, and just a breath of fresh air in a time where there's bad news from a lot of parts of the world and from a lot of economies. And also don't underestimate the effect of the major U.S. indices at record highs in the United States. That just has an amazing, or just a very strong pulling element for other markets. It remains to be seen where the DAX winds up tonight when it finishes trading in a couple of hours, but for the moment it's going up. Most shares are going along, and there's more good economic news from Britain, for example, and from Germany now. Germany in June, industrial production up by 0.8%. The number doesn't sound all that much impressive, but it shows that Germany is on a growth path, and that number is also better than analysts had expected before that. So that was also a good piece of news.
Now, Ulrich, bank stocks are in the spotlight. Efforts by Exane BNP Paribas to raise its price targets, as well as efforts by Italian lenders to deal with its large portfolio of bad loans, paved way for bank shares recovery. How sustainable do you think this would be?
I don't think it's very sustainable. Sure, there's a little bit of good news, for example, from Paribas there, but there's a lot of dark clouds looming over the banking sector right here in Europe. The Deutsche Bank is one example. It's also recovered, but it's seeing a lot of trouble ahead with lots of legal problems, business model problems. The Italian banking sector, which you mentioned with those bad loans there, that could be a huge problem. That could be another banking crisis. It's not that far yet, but it's on the minds of investors. Banking shares were very much under pressure. The Deutsche Bank, for example, hit a record low last week, and this recovery that we've now seen is what people call a technical recovery. There's speculative money in there, people saying, well, perhaps the low is the lowest we've seen now. We don't want to miss the boat on the way up, but it's difficult to imagine that this is in the long term sustainable.
Now, it's the beginning of a new week. What is your outlook for the week ahead?
Well, it could become a little bit more turbulent as we go along. It's been a good start to the week. That's a positive, but it needn't stay that way. August is traditionally a difficult month for equities markets. The markets have often come down in this summer month, in some years preceding a recovery later on in the year, but that's something to behold. And also there's a lot of corporate news coming this week, for example, in Germany, the big utility E.ON, Deutsche Telekom, or the world's largest reinsurer, Munich Re. And if any of these data disappoint, that could have spillover effects for other shares as well.
Thank you, Ulrich, for talking to us on the program. Ulrich Bath is DWTV Channels TV financial correspondent. Now, Japanese shares led gains as Asian markets rallied on Monday despite weak Chinese data, as sentiment was likely boosted by a stronger than expected U.S. jobs report released last Friday. Japan's benchmark Nikkei 225 closed up 2.4% at 16,650.57, while the Topix added 2% to 1,305.53. Japanese shares also received some boost from a relatively weaker yen. In Australia, the ASX 200 closed up 0.73% at 5,537.80, with the heavily weighted financial sub-index advancing 1.09%. Major banks in the country gained nearly 1% or more, with National Australia Bank adding 1.43%. In South Korea, the Kospi closed up 0.65% at 2,031.12. In Hong Kong, the Hang Seng was up 1.39% in late afternoon trade. And Chinese mainland markets climbed, with the Shanghai Composite closing up 0.94% at 3,004.71, while the Shenzhen Composite added 1.06% to 1,962.26. So talking China, where exports have seen a further decline in July, adding to concerns over the global economic outlook. Exports fell by 4.4% compared to a year earlier, which was a slight improvement over June's 4.8% drop, but still worse than analysts had been expecting. Imports were also weaker than estimated, down by 12.5%. As China is a crucial driver of the worldwide economy, the data is seen as a snapshot of the global outlook. The country's exports have fallen for 12 out of the past 13 months, and global uncertainty, ranging from low commodity prices to the EU debt crisis and the UK leading the bloc, continues to mute economic activity around the world. In US dollar terms, we're seeing exports falling to $184.7 billion, while imports dropped to $132.4 billion. Now, this leaves the country with a trade surplus of $52.3 billion for the month of July. Still in China, where government is making effort to reduce the level of poverty in the country, in the Lianjiang Yi Autonomous Prefecture in southwest China's Xinjiang province, we're seeing about 690,000 people being removed from the poverty line.
The Lianshan Yi Autonomous Prefecture in southwest China's Sichuan province has seen 690,000 people alleviated from poverty during the 12th five-year plan period, and is speeding up the work to shake off poverty from the rest of the 380,000 people. Liangshan, as one of the 14 contiguous poor areas in the country and the largest area inhabited by ethnic minority of Yi, is on the border of Sichuan and Yunnan provinces. Many local people live in inaccessible deep mountains with harsh natural conditions. Atulair village in Zanju County, home to 98 families, is known as Cliff Village because its vertical distance to the ground is 800 meters. 358 people of 76 households live on the cliff, and the best among the three possible routes to the outside world is via 17 vine ladders.
We'll go on a break now. I'll be right back.